Today, I'm really excited to have Aly Madhavji on the podcast. Ali is the managing partner of the Blockchain Founders Fund, a Singapore based early stage venture capital fund that is focused on investing in the best blockchain startups globally. Outside of this, he is also a consultant for the United Nations and INSEAD, as well as an LP of multiple firms and a mentor and advisor for many startups globally. He is also the author of 3 award-winning books. It was really great to have Ali on the podcast because I got to get some insight into his investment philosophy as well as the startups that he believes will win, especially with the current state of crypto. So with that said, I hope you enjoy the podcast. Hello, everyone, and welcome to the podcast. And Ali, welcome to the podcast.
Thanks so much for having me here, David.
Yeah, no, super excited to have you on and get into your background and the way you're looking at the industry. But before we get started, I always love to talk about your story and what brought you to the point you are here today. So, what got you into the world of venture capital and startups?
Yeah, it's a really good question. I've always been entrepreneurial at heart. Both of my parents came to Canada as refugees, hustling, trying to make things work. And as you know, from the startup mindset, you've got to hustle, you got to just keep trying, keep pounding the pavement, figure out different pathways if something doesn't work and pivot. And that's kind of been, the environment that I essentially grew up in. And so, from a very early age, I started essentially a number of businesses, not necessarily scalable tech businesses, but always sort of had that entrepreneurial mindset at heart. So it started essentially over a dozen businesses by the time I was 18. And, you know, after that, started getting involved with advising a number of startups, working on different things that I was passionate, a number of ed techs, et cetera. We had a few exits on some of those companies that I was advising, and then started angel investing pretty early on in my career. And it wasn't with a lot of money or anything like that, but the bigger part was, I was able to contribute a small amount of capital and a lot of time and experience and effort, to help make things work. And that actually became a catalyst to one, my own startup and helping to drive that. So in 2016, started a startup. 2016, 17, we raised 300 capital. We grew out our team, to nearly 40 people. And from there, ended up actually after we exited that in 17, ended up we ended up starting Blockchain Founders Fund. And we started off with our own capital at the start. We backed about 50 companies. And then we raised a new fund. So about last year, we closed a $75 million fund. We became one of the first regulated Singapore Web3 funds. And now fast forward, we've got about 110 companies. And at the end of the day, while we've invested in a lot of companies, we still see ourselves as builders, right? Like we like rolling up our sleeves. We like being the first place that founders can come to when they do have challenges, and we like to basically help solve problems.
Yeah, no, that makes a lot of sense, and I think, especially nowadays, with so many different potential sources of capital that founders have, just a massive influx of capital globally. I think founders really prefer to be backed by funds who are led by builders who have been there and done that. And so, rather than just giving high level theoretical knowledge, they can actually understand what's going on in the background and some of the struggles that founders are going through. So it makes a lot of sense how you naturally progressed from from doing startups into investments there. And I think what's really interesting is and you sort of mentioned this is you started with ed tech startups, but then you slowly made your way into the world of Web3 and crypto and blockchain. And so it seems like the major shift there was in 2017, but I'm sure it started from beforehand. So what got you into the world of crypto? I'd love to know.
Yeah, it's a good question. I think, going back, and if you think about the essence of the Web3 space, it's about essentially building a more transparent and fair future, right? And, when you think about leveling the playing field around the world for people, like that's exactly what Web3 does. And from a young age, I looked at education in the same way, right? It's one of the in reality only great equalizers of opportunity, right? You can come from any background, and if you can figure out a way to get some of the resources required, there's a lot of scholarships, a lot of different support, mentorship, etc. Like you essentially can open up any doors and sort of change dramatically your future outcomes based on education. And so I look at it actually as a fairly similar ethos into what, say, higher education can do, and in reality, what blockchain is doing for people all around the world. And I think that's always been a big part of, my background, given my parents are refugees, right? Didn't get dealt a very good hand, to start. And, had to figure things out under very extenuating and uncertain circumstances. And that is all about what, say, like the American dream or Canadian dream is about, is, giving everyone that shot to, go do incredible things. And I think that sort of all plays a part in sort of, I think, what's brought me here today. And so when I first learned about Bitcoin, very quickly went down the rabbit hole on it and just saw what some of this potential could be. And I think a lot of the people that got it involved in Bitcoin or digital assets, crypto, et cetera, like fairly early, generally had a bit more global exposure, could understand, hey, it's not how it is only in like westernized countries, but there's all of these different challenges that, create an uneven playing field around the world that, you know, cut a billion people out of the economic system when you've got a billion people that are unbanked or can't get an identity and therefore can't enter our financial systems. And once you have a bit of global experience and exposure to these things, you understand how important some of these things are to really change the landscape and future of where we're going as a society.
That makes a lot of sense, and I think, yeah, I feel like we're just even now, it's been, I guess, a good 10 years since crypto's really started to become mainstream and became mainstream. But I feel like we're just scratching the surface. And we'll get into this later in the podcast, but even though right now it's seemingly a downtime for crypto compared to a couple of years ago, I actually think there's a lot of interesting work, even more interesting work happening now in this crypto winter than there was a couple of years ago. So I'm definitely very excited to see what crypto technologies allow us to do. And there's a lot of other builders, of course, like yourself and others out there who are as well. So yeah, before we get into all of that, I'd love to go into your investment thesis and the way you approach evaluating startups, because I know you mentioned that you've invested in over 100 startups. That's definitely not a small amount. That's a that's a lot, and so you've definitely been there and done that when it comes to evaluating startups and evaluating if you should make an investment there. So, what is your thought process when a startup approaches you or when you see an exciting startup, and how do you prioritize evaluation and those different features that you look at?
Yeah, I mean, it's a great question, and it's one that comes up a fair bit. So, we look at, just for context, we look at about 400 to 600 startups a month.
Wow.
And we operate very differently from other VCs. So at your typical VC, an analyst would be going through those deals. They'd say what looks interesting, what doesn't, and they'd be cutting out, 90% of them, 80% of them. And then sort of maybe the partners get involved after a first call from the analyst or something like that. We operate actually on the other sort of extreme. So actually, partners go through every single deal. And this might, maybe you're thinking, hey, this probably doesn't seem like a good use of partner time, but the way we look at it is when founders are doing something extremely innovative, extremely cutting edge, you actually need that wealth of experience and to be able to draw on as you look at some of these opportunities. Because especially in an industry like the Web3 space, where there's so much novel innovation that just never existed before, you actually need to be able to, like, break that down outside the box, draw on different industries, different historical experience, et cetera, and be able to pull in from these different things. And I'll give you some examples. I mean, we started investing in blockchain and gaming in 2018, and nobody in the world had a thesis on blockchain and gaming in 2018, and everyone thought we were crazy, right? In 2019, we started investing in AI and blockchain, and again, everyone's like, why AI and blockchain? It makes no sense being together. And we're like, there's so much opportunity. You could do X, Y, Z. And they're like, we were sort of mind blown by it, but people thought we were nuts, right? And so, like, when you look at where some of these technologies can go and like what inflection points are happening and like what combinations of technology can really unlock tremendous growth and what that next, few years might look like, I think that that's where some of this becomes very, very important. So, first off, we have partners going through every single deal, which is quite different. Then when we look and evaluate deals, there's 90 different things that we're looking at. So we actually go through a lot of different things. Of course, there's your standard things that everyone's looking at, like, of course, like founders, etc. We do look for quite strong tech teams,
Mm,
because in the Web3 space, businesses naturally are more technical oriented, or require fairly heavy tech builds. And so that is actually quite important for us. In a nutshell, if you were to boil down what we're looking for, and many other VCs could be looking for similar things, is we're essentially boiling it down to progress over time, right? How fast are you moving in as little time as possible? And that doesn't necessarily mean revenues are skyrocketing. In certain cases, these are pre-revenue companies that we're backing. But we still want to be able to evaluate, like, are they moving extremely fast in as little time as possible, right? Whether that's even like on their development cycle, et cetera.
mm,
Then you asked on sort of the thesis component. We look at it actually quite different. A lot of funds will sort of come out and say, hey, we invest in DeFi or we invest in gaming. And we don't really look at it like that, right? So we think they're sort of too broad of a thesis. And there's been a lot of developments in the space over the last few years that it's too broad. And so, like, we need to go much more granular, say, like, what's specifically wrong with DeFi? Like, why is DeFi not winning today compared to, like, and having like an incredible exponential growth rate? Like, what are the bottlenecks and how do those bottlenecks get solved, and sort of what's unlocking that growth? And then let's go find companies that are solving those bottlenecks. And so it's very specific, right? And so right now we've got 25 open sub thesis across the entire Web3 industry where we think there's major problems and no market leader or a clear, opportunity for companies to use that as a beachhead to scale and grow off of. And so that's kind of how we think about it. These sub theses change, and they're somewhat fluid.
yeah.
But that's kind of the way that we think about things.
Right, right. That makes a lot of sense, and I think that first point first, the partner evaluating deals. I've actually talked to a lot of founders who have very strong relationships with venture capital funds, but when they initially reached out, they went through the analyst and partner route, and sometimes what ends up happening is that the analysts, throw their application to the side, and then through whatever channels they finally get to the partner, and the partner never heard about this company before, even though the analyst said, yeah, the company, the partner dismissed it. So definitely going partner first, I think, has a lot of benefits. With the biggest one being that a lot of time analysts, I feel like, are more uh, subject to the hive mind going on. Like if there's a big hype cycle or big technology that everybody's chasing afterwards, they might prioritize those deals first, while partners who have seen these cycles go on might be able to have more of a logical or more of a nuanced approach to things that actually take into account where the industry is going rather than what the industry is at today. So I think that's
Yeah,
a very interesting way you guys are operating.
absolutely. And even there's always like things that are maybe not, you know, top of mind. Like, I mean, and sometimes we're doing deals that, like, aren't the sexiest. Like, actually, very often we're not doing what's sexy today, right? And when we started, like I said, when we started doing AI in 19, people thought we were nuts, right? And like what we were backing. And even some of our companies in our portfolio, like, you've got to really get your head around, like, why are we doing certain deals, right? So take, for example, and what I think is an interesting use case for blockchain, but we haven't heard many people talk about it, is we've got a company called Pitastic that's basically putting pets on chain. So think about essentially like pet IDs, so that, and any pet owner that's listening will know that, if you have a pet, you've got to basically maintain these vaccination records, and they're generally on paper. And if they're not on paper, they're on these sort of siloed centralized networks. And we've seen a huge value in being able to digitize these and allow, every time someone takes their pet to a groomer, a vet, a dog daycare, pet daycare, like, you now have this all digitized, and you have pet IDs that actually make sense, that are, sort of follow and sort of allow access more effectively. And so, they've put on hundreds and hundreds of thousands of pets on chain this year, and we think it's a very interesting opportunity. And Nestle's gotten involved, which is one of the biggest pet food makers in the world, et cetera. And so we think there's a huge opportunity, for example, in markets like this, but it's not front and center of what you might think of when you hear blockchain, right? All the way from that to, some pretty decentralized protocols. But then, we're investing in, like, for example, Breshna, which is a game. is basically what they're doing is they're allowing anyone to be able to create their own game in a few minutes, right? So it's a no code game builder. Anyone can create a game, and then they built the world's first text to game engine. So now anyone can just type what they want and build you a hyper casual game in minutes. And they built hundreds and hundreds of thousands of games this year, and it's just been blowing up, right? Millions of users playing these games, etc. And so really, really cool things that people might not see how these different things actually come together, which is almost like in that case a culmination of like education, AI, and blockchain all sort of coming together to allow you to do things that you just couldn't do 5 years ago.
Yeah, 100%. And I think, as these technologies mature, we're only going to see new combinations come up. And yeah, I'm very, very excited to see what ends up happening. And I think, one of the things you mentioned there is that you guys are evaluating 400, 600 startups, not per year, but per month, which is a lot. And the partners evaluate it. So how do you guys cut through the fluff? Because otherwise, you guys are just going to be like evaluating deals all month and not be able to actually cut checks.
Yeah, no, it's a that's a really good question. I mean, we got lots of time, so that's one. Two, you get pretty good at it when when you look at that many companies every single month, right? I mean, depending, so we come into companies pretty early. So oftentimes we're investing companies pre-seed, seed as our first checks, and then we're doing, fairly large follow-ons through to Series A. We typically write 200K per company when we come in, and we do follow-ons up to 5 million. We've got a much larger percentage of our fund allocated to follow-on capital compared to the industry. And so we do look to sort of double down on our winners. But when you look through that many companies, you very quickly start seeing patterns, right? I mean, for us, team slide is very important. If they do have traction slides, like, of course, I think that's like a key thing. But we want to definitely understand, like, what's the problem that they're solving? Is it needed? Like, is there a clear market for this? I mean, generally, because of how much we've seen over time, like looking at certain slides, like the market slide, we wouldn't need to typically because we already know what the market is based off of the problem, just if it's something that's come up before. And you'd be surprised, but a lot of things come up, 10, 20, 30, 40, 50 times over like the course of a few months, right? And you'll see trends of, what's hot at certain periods, etc. Um, so between three partners, though, it's not actually too bad getting through 400 companies.
Okay. Okay, fair enough. Yeah, I guess you guys probably have a nice system, and I guess experience is so key there, right? Like what to look for naturally just going through all these deals. So at a certain point, at the beginning, it probably took you like an hour per deal, like probably reduced down to 5 or 10 minutes. You can get the key factors that you need to at least move on to the next stage. So that makes sense. And I think one thing that's really interesting is you mentioned how you're a builder led venture fund, and there's always this conversation between founders and investors, and people keep going back and forth when how involved an investor should be in the operations of a startup. And I feel like every venture capital firm has their own thesis on this, but I'd love to know what your thoughts on were that with that.
Yeah, that's I mean, we sort of look at it on the extreme side of like we want to be extremely hands-on. We want to be very supportive for our companies. I mean, we do probably about 35 recurring calls a week with our founders, right? So we are
Mhm.
very hands-on. We have minutes with every single company, and we have action items on our side and their side color coded every week when we do these calls or whenever the frequency of these calls are, depending on the company and the stage. Um, so we are very hands-on on this. I think that to us, there's a few key things, right? And I'll give you sort of an experience off of my startup previously, right? I actually used to send updates to my investors and advisors every single week. And that might sound a little intense, and it probably is. But even if you're sort of doing this monthly as a founder, it is a huge advantage, right? There was things that easily would take me 20, 30, 40 hours to probably go try to figure out. And I would just ask for an intro to like the world leader at something or someone that's a world expert in a specific domain or CEO of a specific type of partner company that I'd want as a Fortune 500. And I'd get an intro the next day. And
Right.
that would save me so much time, right? I mean, and so these types of things accelerate progress so much. And so this is what's important for founders to know is like you need to ask for help and like be able to figure out like what do you need, and sometimes your investors or advisors can help you figure out what that is. but then be able to ask for it, because you might actually save a tremendous amount of time just tapping into an expert that's done this, or very familiar with it, and you can go save a ton of time. And so the more you ask, the better. And so we do encourage all of our companies to even send out updates every single month. We went through 1,000 different startup updates, and we actually went and put together our own format on what we think are the most effective based on all of them. We give that to our startups, and we help them sort of build their own process around this. And we found it very, very helpful, because they can actually accelerate quite a lot. Whatever they need help with, they can actually vocalize, and it gives a really good opportunity for investors to help, because I think a lot of startups will tell you, like, hey, a lot of investors told us they're helpful, and then they didn't end up helping. And there's a few reasons around this. I think one, like, of course everyone gets busy, and like I don't think it's necessarily always intentional, right? On our front, it's a little different, because we set up actually like recurring calls with our founders, so there's always these sort of recurring touch points. But like at other investors, I don't think they're trying to not be helpful. I think it's oftentimes like a gap in communication on specifically saying what you need. And if
Right.
you can tell them what you need, like, they'll probably go help if that's in their network. And if it's not, you should be get on their case and be like, hey, I need some help here, right? And so I think it's actually very important as a startup founder to even learn how to activate your investors and get, the most value out of them, because not all of them are going to do what we do and schedule recurring calls with you and have like a process. But there is a ton of value that you can get out of this to accelerate your business. And so I think making sure that you're on top of that is pretty key.
100%. And I think what I've learned from my short time doing startups is connections are everything. And so you should leverage whatever you have in your power to utilize that. And your investor is a no-brainer there, right? And as much as you're invested in making the company succeed, they are too, because at the end of the day, they've invested their hard capital and man hours into it as well. So that makes a lot of sense, and I think it's really great to see how because you guys are also investing in pre-revenue or early stage startups. Setting up processes simply like investor updates can actually go a long way in the company actually becoming a company rather than going from a small project, honestly, to something that actually people will come to work at. So yeah, that's really interesting to see. And yeah, I think transitioning on here, one you guys are focused on blockchain and crypto, and I touched on this a little bit earlier, but we are in a crypto winter right now, where a couple years ago I feel like crypto went through a massive hype cycle, but it seems to be a little bit on the back burner compared to where it was, which I actually think is a good thing, because a lot of the hype and gimmick startups seem to have been phased out of the market, and so the real actually good companies and ideas are sticking around. But that begs the question: which companies do you think have the potential to survive this crypto winter that we have right now?
Yeah, I mean, the crypto winter question, it's interesting, right? So, and I'll give you sort of some sort of high level, like, I guess, what's happened over the last like year and a half, right? So, definitely came into this crypto winter, in sort of the tail end of sort of 21. And what's been interesting has been simultaneous to that, VC as a whole has gotten hit pretty hard, right? So macro VC, not just crypto as an industry, but we're talking about all through fintech, SaaS, et cetera, right? So what you actually had was a large correction on valuations in public markets that sort of slowed down Series A, B, C onwards of those investors. Those investors started investing in seed and pre-seed because they couldn't just stop investing, right?
Right.
So you actually had an increase in valuations over the last year in seed and pre-seed, which was odd because you had an 80% correction approximately on public company valuations that were startups, but you had an increase in valuations on seed. Anyways, fast forward, we've seen that correct now over the last like 90 days or so, where valuations of seed, pre-seed have actually come down a little bit. They're
Mhm.
starting to come back up a little bit, but like we saw them come down, which was good, I think, for everyone, because deals just weren't happening. Like, not enough deals were happening, I would say, over the last year. I think you're right. There was a lot of those also, I guess, like, not serious companies, shady companies, probably people that didn't really figure out product market fit, didn't really have necessarily like the skill sets to build what they were actually trying to build out in terms of vision. And a lot of those companies like washed out, shut shop, etc. That sort of made sure that like very high quality companies have like remained, they've been persistent, they've been building, and a lot of great founders just went heads down and like built great products, built, interesting traction, even though like they didn't have the marketing budgets they needed. They didn't have necessarily like a lot of external resources, but they were able to go show like significant progress. And I think what you're seeing now, even though the markets started to pick up a little bit, I don't think VC's fully come back yet, but I think what you're seeing is, a lot of investors that do and are willing to sort of take those bets like us, a lot more active in this market, right? We're doing more
Mhm.
deals right now than we've done in any month ever in our fund, right? And so, like, I think that's a really good testament to, what we're seeing in the market, the quality that we're seeing, and what we're hoping for sort of going forward in 24 is that a lot of these other investors are coming back into the market because they haven't been deploying a lot over the last year or year and a half. And so we're seeing that a lot of dry powder on the sidelines. We're seeing markets get a bit better. Hopefully that sort of comes back in 24 stronger. And with sort of what's happened on the digital asset side, so not only will the macro hopefully come back a little bit, but I think you'll see the digital asset and sort of Web3 investors come back stronger, which has already started. One thing to keep in mind on this that I think is challenging is like the global macro picture still doesn't look great, right? A lot of us
Mhm.
were sort of relying on strong consumer sort of wavering a little bit right now. It doesn't look great. That might mean sort of corrections on like global macro. And then oftentimes it is more difficult, I think, to invest in this market as a venture capital firm, as a private equity firm, or any of that, because your risk-free rates are quite high, right? So you've got, nearly 6% risk-free rates. That means you've got, low risk deals that you can do in terms of like bonds, or like yields that you can achieve in terms of bonds at 8 to 12, private credit 12 to 15 or 11 to 15. So you've got a lot of opportunities that are fairly low risk that, you can achieve fairly high returns that
Right.
oftentimes like VC hasn't made as much sense in the last year and a half. And so, partially for the industry to fully come back, you're going to need to see a correction, probably on those risk-free rates.
Right. Right. Which I think we're barreling towards in 2024 and 2025 as well. So hopefully that should see an increase in venture capital as well going to startups. Um, well, I think, that's we'll see where things go. And I think, one more consideration, especially with Web3 and crypto right now, I think this has especially become a bigger issue in the last 3 or 4 years, has just been the amount of government regulation that's been coming on different countries. And I think every country is putting their own stance on crypto. Like I know the UAE has become very crypto friendly. The America has become a little less crypto friendly. And so, every country seems to be making their own stance on where they think crypto should be. And so I was just wondering, like, what do you think the future is for government policy in crypto? Do you think it's always going to be a divisive issue now going forward, or do you think we'll find this middle ground between somewhat of a global middle ground?
I mean, I think we've got some big challenges around this, and I'll tell you how I see it because it's a little different than probably most, right? I
Hmm.
think you've got two markets emerging. So you've got sort of this regulated crypto market that'll emerge, and that'll be based on this regulation that's going to come out. And in reality, it's likely going to be different between different countries, and it's going to be basically like stepping on different flames everywhere you try to go because you're going to have inconsistencies in regulation until at some point it starts to standardize, but that's probably going to be years away because everyone's right now is coming out with different things, right? And you'll probably remain with some differences sort of longer run. Then you've got sort of probably what's going to be an unregulated path to crypto, right? And realistically, both of these can thrive because the unregulated side, I mean, still creates and solves massive problems for society. I mean, think about our current system. There's a billion people that are unbanked or don't have identity that can't access our financial system. Like, that's not a mistake, right? Like this is by design that we've set up rules as a society that sort of has allowed this to exist and cut out a billion people. Now, these are problems that Web3 and crypto can solve, but if you implement all the same regulations, we're going to get the same solution, right? Which is cutting out a billion people. And like, to me, that's not okay, right? Like, we can't be okay as a society being like, let's cut a billion people out of the financial system And so we need to find ways to allow some of this to happen and allow like a way to solve some of these challenges. But of course, we're still trying to follow and figure out how do we do this in a way where regulation ideally adapts, or there's ways to, allow for this without violating things like, sanctions or AML laws or like, CFT. Like so this is actually very important, and there needs to be changes in the way things are done, and regulation, while there's a lot of benefits to it, has created these types of gaps or missed opportunities that just cut too many people out of the system. So we need to find ways where both of these move forward, and ways that people are still protected, consumers are still protected, because a lot of regulation comes out after like there's bad actors and they take advantage of consumers. And like we of course don't want that either. And there needs to be like certain ways to either self-regulate or regulate that accordingly. But I think there's a long way to go, and I think realistically both of these spaces can actually thrive, under sort of what's happening going forward.
Yeah, and I think a lot of the a lot of the bad actors, I think, in the last couple of years have made people's stance on crypto change, especially the general sentiment. And so I know a lot of people nowadays, have asked me what is they're unsure about the how to understand Web3, what the value is, and if we should even pursue these technologies. And I have my own answer for that, but I'd love to get your answer for why you think we should keep pursuing Web3 technologies and why this is something that's important.
There's a few key things here that I think oftentimes get missed, right? So, I mean, this is some of the most transformational technology in human history. So, if you think about the ability to, you know, solve multi-party trust issues and, inefficiencies, lack of, things being able to happen because multiple parties can't come together, you can solve all of these problems or a lot of these problems with blockchain technology. I mean, when people see NFTs, the hype, I mean, there was a lot of bad actors in that space. People are thinking about monkey images and JPEGs, and like that's further from what this space is about than anything, right? Like if you think about, NFTs, it's the first way in human history to track ownership in a digital world. And then if you think about the fabric of our society, it's built off of ownership in the physical world. And, 30, 40 years ago, we probably spent nearly 0% of our time or 5% of our time in the digital world and 95% in the physical world or 100%. And now, if you go ask a Gen Z how much time they spend in the digital world versus physical world, it's probably 70% of their time or 50% of their time in the digital world, and a corresponding amount in the physical world. And so this trend is not changing. And so literally at the heart of the way we've built society, I mean, ownership in a digital world is essential to human history and human, survival long term, and like the way we're going to adapt. And so this is actually like very critical things, I think, as part of the fabric of our society that are going to thrive and will win, right? So
Mhm.
I think oftentimes these get missed because of these hype cycles and because of people sort of manipulating it, people taking in the wrong direction, etc. But these are transformational technologies, and it is core to what we need even as a society to move forward effectively.
For sure. And I think, yeah, I mean, any new technology that comes out, I think you see a lot of bad actors that pop up. I mean, even with AI, right? There's a bunch of deep fakes now coming out, and other big issues that AI is having right now. And I think we saw the same thing with crypto. But as the technology matures, people understand it more. Regulation comes accordingly. I think a lot of things change. And I think what's really exciting to me in the crypto space in particular is, you know, aside from these bad actors, what we see right now is a lot of infra companies popping up in crypto. And I think what makes it very interesting is that when you find entrepreneurs or people can really bring those technologies together for a beautiful blend, that's when people are going to start seeing the value of these technologies. And so for these infrastructure companies to basically get the foundation and the bedrock for that is so important. And I think it's very interesting to see. And we'll see what happens. I think there's a lot of great ideas that are going to come out because of the infrastructure that's being developed today.
Absolutely. I mean, yeah, we're seeing it every day, and I think there's companies that are just solving. so many critical challenges and points that are going to unlock tremendous growth. And I think, bringing together these different technologies, whether it's like blockchain and AI, and like the opportunity that that's unlocking is tremendous. Whether it's blockchain and like bringing together like IoT devices and like what that's doing on the DePIN side or decentralized physical infrastructure, I think is quite interesting. And so there's all of these great things that are starting to get unlocked given the timing of where we are with these technologies and the maturity of some of these technologies or emergence of these technologies, that I think is creating like incredible opportunities on top of that foundation that's being built.
For sure. And I think, what's also really interesting, I think, as an engineer, I love focusing on the technical, seeing how people can take these different concepts and put them together. But I think the real winners that we see in the business world are the ones who are able to really leverage that into a growth strategy and into a brand and into a marketing strategy to bring users on. And it doesn't matter how good your technology is if you aren't really able to do that. And, we've seen a lot of winners, for example, in crypto. Dogecoin is just a fork of Bitcoin. Yet it got so many users just because of the branding, and people loved it, even though the technology wasn't there. So I think as equal to the technology, if not more than technology, is the branding and your growth strategy. And so when you're advising companies in your firm or in your fund, what are some of the directives you give to them in terms of going for growth strategies and what to take into account when they are growing?
Yeah, I mean, it definitely depends on the stage of like exactly where they are. I mean, we tend to go from the perspective of like being hyper on the growth hacking side with our
Mhm.
companies. And so we're not big fans of our companies going and spending like tons on ads early on, right? Like we want to figure out and optimize, do a lot of A/B testing, figure out what's working, like hyper focus on like cleaning up the personas and making sure we know exactly who we're targeting, starting to build like very, very effective like lookalike audiences if possible, if that's going to help with like some of the initial targeting. But like we really want to get down to, in a very lean way, figuring out what like CACs and LTVs are, and then like we can figure out, does it make sense to sort of push more on this front. We do a lot of like data mining, data stitching, data enhancement with our portfolio companies, figuring out like, how do we target a lot of, key customers, especially if they're on the B2B front. How do you target a lot of those key customers at zero cost using like more effective methods? And this can actually be really, really strong if you figured out the personas effectively. If you skip that step, it's sort of a lot of sort of garbage in, garbage out. So it's not as effective. But if you can sort of hone in on those personas, you can start doing a lot of really cool things. There's a lot of great tools out there that are really cheap, really cost effective, that startups can use, and learn a lot of these things, right? Like it's easier now than ever probably to learn a lot of these things and pretty quickly be able to execute on some of these strategies.
Yeah, yeah, I think that makes a lot of sense, and I think the growth hacking point you mentioned there at the beginning is so important because a lot of people I feel like have this notion that they run for funding because they need to run ads, and that's the only way they're getting their customers. But especially in 2023, it's never been able to find an audience and a customer with a lot of different other methods like a subreddit or Discord or something along those lines. And actually, if you can find customers using those growth hack methods, I think those are actually the people who are going to take you over the top, because those become your most loyal customers who stick with you through thick and thin, even when your platform is just small. And so,
Absolutely. I mean, those are champions, right? Like those are the ones that are going to drive word of mouth and like tell their friends and all of those things that are so critical early on to a startup.
exactly. And I think running ads at the beginning can actually be sort of detrimental to that, because you just have this audience that's you don't have this focus, that you don't actually think about what audience should you be targeting, which goes a lot farther from just ads. It goes farther into your company as
Yeah,
well.
so if you're doing full scale ads, I'd agree. I think where we see it valuable is creating like extremely small budgets, like even let's call it $30 a day, right?
Right.
And using that as a way to A/B test messaging through ads, use it as a way to like figure out different aspects of like what could work, what doesn't work, like learn more about your customers. I think that's where ads can be useful. It's more like information gathering and learning about your customer rather than actually trying to get them to like convert to the end product.
hmm
Um, And that's where I think ads can be useful early on, but not in like full scale marketing operations.
Mm-hmm. Mm-hmm. Makes sense. Well, thank you so much, Ali, for coming on to the podcast. I've had a great time talking to you about this, and I'll be honest, I know about crypto. I've done my small projects to understand it, but definitely, talking to someone who's deep into the space has been great to further my understanding here. Uh, I have two last questions before I let you go, and the first one is there a book that you recommend us reading or checking out?
Yeah, absolutely. I mean, right now I am reading Principles from Ray Dalio, which is a phenomenal book. So if anyone hasn't read it, definitely recommend it. Um, so that's a book. What was the second question?
No, I mean, it was just a book, but
Okay.
awesome. Yeah.
Okay, yeah, fantastic. Definitely check it out. Great book. Another one of my favorite books actually is Losing My Virginity by Richard Branson. Also just a phenomenal sort of take on life. Um, and definitely recommend it.
Okay, I will definitely check those two books out. I have not read both of them, so something to add to the list there. And yeah, the last question I had was just, what are the next steps for you and the Blockchain Founders Fund? What can we look forward to?
Yeah, absolutely. So, I mean, we're just out there looking for incredible founders. I mean, we fully raised the funds last year. So, if you are, building something interesting in the Web3 space, you have a great idea and you're building it out, feel free to reach out to us. We'd love to hear from you. You can find us on all sorts of social media, on LinkedIn, or even go to our website at blockchainff.com, and you can just share what you're working on with us. And again, we look at every single one, so would love to hear from you, and hopefully we can help you scale on your journey, or at least add some value along the way.
Awesome. Yeah, no, I'll leave all the links down below in the bios if anybody wants to check it out. Feel free to do that. And I definitely have some friends who are building the Web3 space who I think they might be interested, so I'll definitely send them your way if there's a mutual fit there. But thank you so much, Ali, for coming onto the podcast, and yeah, looking forward to seeing what you and your portfolio companies do.
Absolutely. Thanks so much for having me on the show.
A lot of people have been asking me what I use to do my podcast, and I'm happy to say that I use Zencaster. Zencaster is awesome because it's an all-in-one platform that allows you to have all the tools that you need from distribution to recording all in one platform. And so whether you want to record on the platform or you want to distribute to Apple Music and Spotify, you can do it all through Zencaster. It's also really easy to record a podcast with Zencaster because it's available on the browser. And the best thing about it is you actually get studio audio quality from those recordings because Zencaster records the audio into the browser and then uploads it to the cloud. So you don't have to necessarily worry about your mic not being as good as you see in some video calls online. So if you want to get started with Zencaster today, feel free to go to zencaster.com/pricing and use my offer code DavidG for 30% off your first paid month. I'm really excited to see all the stories you guys share using Zencaster.